The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 17th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 32 points, trade at 26,122. The S&P is down about 9. NASDAQ 100 down 0.9%. That would be 65 points to the downside. Trade down at 74.80. Russell's off 14 points. Semis are down 5. Trannies are down a little over 1%, 120 points to even Steven. Spot volatility is trading down at 12.99. I think getting pretty close to its 50-day exponential moving average, only up 7.6%. Gold's up about $6. Silver's up 9 pennies. Light sweet crude back 40 cents. Lead the charge here dollar-wise. The upside is Tilray Inc. up $11. Wabtec up 6. Alliance Data Systems up 5. Allegiant Travel up 5. Swiss Helvetia. Something like that. It's just SWZ. It's a ticker symbol. Oh, 140%. Hey, now that's a move. So clearly something's going on. They've either cured something or it's an IPO. I don't know which. Amazon is the big dollar leader to the downside, up 2.5%. 45 buckaroonies. ABIOmed off $18. Inogen down 13, Booking Holdings off 12, Biorad Labs off 11. So there's things to look at. Of course, we're going to look at what you want to look at, and that means we're going to first go to Gary? No, oh well. Where's our first question? Let's do this. James C. wrote in. Can I do this in 5 minutes? This is going to, and what James wanted me to do is James wanted me to see if I could, he asked if I could review, in essence, what I shared last week, which was where I believe, let's just do this. Let me just go right, and if you don't catch it all now, I'm going to do this during the segment that I do with Tom at about 3:15. But the statement that I made last week was that the April low for the Dow, the April low in 2018, will never be seen again. Never. I use the word never. You should never use the word never, but I use the word never be seen again. Now, I know that folks out there are saying, how can that be? We're in the longest bull run ever. Look, if I made that exact same statement to you on October 20th, 1987, right, the day after the crash, if I made that same statement, I want you to put yourself, be a little objective here. If I made that same statement to you, October 20th, 1987, that we would never see that low again, would you have believed me then? Probably not. In fact, I know exactly what it is that you're thinking. You're saying Looney Tunes. I hear you. You're saying Looney Tunes. This guy is crazy. Maybe, just maybe, I'm crazy good. I mean, after all, I have been able to attain and maintain that #1 position as the #1 market timer inside the S&P 500. It's just not happenstance that occurs. So here's what I see that most others don't see. And it all starts with that 87 crash. Yeah, so that's a pretty cool thing. Because you see, the crash of 87 was nothing more than a test of its logarithmic trend line that began at the high in 1929. So we're using historical data. We're going to go take a look at the top of 1929. We're going to set our scale to logarithmic. We're going to go ahead and use the high in 1966. And when we do that, what we can see is that the Dow broke through that trend line. It broke through that in April of 1986, right about where my cursor is at right now. You can see that trend line. You can see where price moves above that trend line. It's a breakout of resistance. Now, the most bullish outcome is when you see something break through resistance and it comes back and it tests that level in order to give us what we would call a change in polarity. A change in polarity meaning old resistance has now become new support. That is exactly what took place in 1987. So the Dow made that low on October 20th, 1987. It was never seen again, has not been seen again, and that resulted in what we'll call a new paradigm shift in price. What do I mean by that? I mean, we just simply have gone to the next level. You know, it'd be like playing an Eagles tune out here. We're taking it to the next level, something along those lines. That exact same logarithmic trend line, by the way, and this ain't no coincidence. We can take that exact line. I just can't do it here magically. I could, but we just simply can take that exact same line, add it to the 2000 and 2007 top. That's in the upper right-hand corner here. And look what we get. We get a breakout of that trend line, just as we did back here in 1984, 85, whenever that trend line, I think it was 85, when we saw a break of resistance then, we had that same break of resistance here in January 2017. So we can make the same conclusion. The Dow has entered a new paradigm of price beginning January 1st, 2017. I know, you just can't believe it until you see it with your own eyes. Now, I know somebody out there is saying, hey, Steve-O, wait a second here. In 87, we saw price pull back to its logarithmic trend line, and that's when there was that new paradigm of price. And I'd say you're exactly right. That was my thinking, too, until back in the early part of this month. In Labor Day weekend, it poured not like it did in North Carolina, South Carolina, but it was pouring around here. You couldn't play any golf. You could watch a little bit of football. So I was saying, you know, this market could be a little deceptive. And I was having one of those wham moments. You know what I mean when I say wham moments? It means, what am I missing? That's the wham moment. You know, oftentimes, the answer is really right in front of us. We just simply don't see it. I would ask you, if you're taking a look at this picture right here, what do you see? Do you see a younger or older woman? What do you see in this image when you take a look at it? Now, of course, you know the answer is both. But you see, we tend to choose what we want to see. If you're bearish, you see the bearish side. If you're bullish, you see the bullish side. I like to think that Stevie sees both sides of the markets. That's what you pay me to do, although not enough. But that is what you pay me to do, is see both sides of the market. That means you have to take the market apart. Look, here is the image of that younger girl where my cursor is at. Here's the chin for the older woman in the lower left. They both exist, folks. When we come back from this break, I'm going to finish this off so that you understand where the markets are headed. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do.
Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Are so cool. They just simply pass the test of time. I've been using this image since the 1980s. 1980s when I was running a sales crew and I wanted to make sure that they could see both sides of the trade, so to speak, out here. So this is the image where there is a image of both a beautiful young lady and a older woman out there. And the older woman, if we take a look at it, it's easier to see on this picture here. The chin, if you follow my cursor, chin is down at the bottom. You've got her nose right in here. This is her nose. This is her left eye. So she's looking sideways, kind of left and maybe a little bit further left. So if left was 90 degrees from where you are, you know, maybe about 100, 110, something like that. She's wearing a little babushka or something to wrap around her head. Here's her hair out there. Here's one of her right eyelids or eyebrows out there. I mean, so you can see, or most people can see the older woman. When you break things apart, just like as you do when you're taking a look at the market, because you have to admit there's both bulls and bears in the market, meaning directly speaking, buyers and sellers at any point in time. So you have to be able to see both of those cases. When you break this apart, you can certainly see the younger woman out here. You're just looking at this image here where my cursor in essence is going around, and here she's looking at 90 degrees, only instead of maybe about 110 or 120, more like 70 degrees. And there you can see that that is her eyelash out here. She's wearing a little bow in her hair, and there's her hair out there, and you can see her neck. You just separate it from the rest of the image out there. So I can see both. You need to be able to see both if you're trading these markets out here. So what was Stevie's wham moment? Look, I had been thinking that that logarithmic trend line attaching the 2000-2007 top is where a retracement was going to pull back to. But why wasn't it? That was really the what am I missing moment. And so I drew a new logarithmic trend line. What I did was I went from the highs in 85 to that 1987 high, and voila. What did we see take place here? We saw that the 2000 high stopped right at that trend line. At that stage, I knew that I was onto something. I wasn't fitting something just to make my case out here. And what we have is we had in 2018, the January break in 2018 looks very much like that 1987 break of its logarithmic trend line. And what did we have take place in February, March, April, May, June? Nothing more than a test of that trend line. And in July, what we saw was a break. So a new paradigm shift in price is likely to have taken place. And the reality is, when I say that the lows of February or April won't be seen again, there's one little caveat to it. And that little caveat is going to take place, meaning I can't completely make that call until I see the 2018 highs in U.S. dollars for the Dow get taken out. But if we do, folks, I want you to put yourself back to 1987. We don't need a crash to be able to be the thing that tests a trend line. It can be a correction, which is what we've had in 2018 out there. And if we see the Dow, or when we see the Dow, really is more likely the language that you and I should be using. When we see that 2018 high get taken out, those lows from April and February will not be seen anytime soon, as new highs will come. So that's what Stevie sees. With regard to new highs, you know I've been talking about the 30,400 mark. That's just your 1 to 1.272, A to B equals C to the upside that is well underway. The reality is it's more like 35 or 39,000 that we're looking at inside the Dow, about 50% higher than where we are trading right now. So, James, that's what I see that's going on in the market. That is the bigger picture. I could give a hill of beans that the Dow is back 51 points right now. Actually, I could, because what it's doing is it's setting up the next buying opportunity. And if we go try to figure out what's that next buying opportunity, one of the things that you and I can do is we just simply try to identify where is support. So inside the Dow, the one thing that you and I can use to identify support is its TAS market profiles. And that's what we have up on our screen right now. We've got the ES Mini on the left. We've got the NASDAQ next to it. Then we have the Dow. And then next to that, the Russell 2000. What you and I are interested in right now today is we're looking at the Dow Equity Futures Contract. Support inside the Dow Equity Futures Contract, when we take a look at this screen, is between 25,964 and 26,022. We know it's a bullish structured box, so that 25,964 should hold as support. What's going to occur if it does hold its support? Well, we're going to see on an intraday basis some type of bottoming signal, much like the types of bottoming signals that we have seen over time in all of 2018. Stevie's Rhodes Momentum Indicator bottom. Those are all the black arrows on my screen. The most recent one that we had was just last Monday, as a matter of fact, out there. So will another one form? Yeah. Will it form above the prior one? I don't know the answer to that. Could be out here. And we may not see it in the NQ. We might see it in the ES. But we're going to see some type of signal like this form. Just like the signal at the top inside the NQ on a 5-hour basis, what's that Rhodes momentum? Those are the red arrows as we take a look at it. And so this is one of the charts that we're going to want to take a look at, which really kind of goes into the question that James wrote in. Justin wrote in. He says, hey, Steve-O, what would be a good buy entry into TQQQ for a 12-month long-term hold? Also, was the NASDAQ bullish in all currencies? Love your show. Well, I love the fact that you listen to the show, and you provided a great question because other listeners wanted to know the same thing. The answer to your question is I won't know until we actually see the pattern out here. I can give you a price projection area, but the reality is we should see some other bottoming signals on an intraday time period. How will we know if we see those? Well, I've got the BOB system, bullish or bearish. That is the black box system that provides us with all of that information in a heartbeat. Right now we can take a look at the 30, the 60, the 120, and the 300. So we've got the 1 hour, 2 hour, 5 hour, and the 30-minute charts out here. And over on the right-hand side, it tells us about those signals, whether there's a top or a bottom on an intraday basis. We will see those signals take place. At a minimum, we will see Bob's market outlook for those time frames switch to bullish in each of those time frames, whether it's 31 hour, 2 hour, or 5 hour. That'll be able to be an indication as to the fact that that next bottom has formed out here. So that's what we look at. As far as a price for the TQQQ, you're going to have to watch the bottom of the NQ's profile, and that's at 74.50. But I do want to caution you, Justin, just because price pulls back there, what you'd really like to see is some other type of bottoming signal to confirm that that is support. And that really feeds into the question that Gary wrote in. Gary's a newsletter subscriber, and he was asking, hey, in today's newsletter, you had given us a target inside the ES to go ahead and pull the trigger. And his question was, hey, if that happens today, should we do it? And my response was, hey, look, I'm in front of the screens basically for most of the day. I'll see these signals. No, I don't want you to just take that entry price, even though it could be support. We want to wait to get some type of confirming message on the shorter term time frame. What does that mean out there? Well, it's pretty simple. If we take a look at, for example, the ES Mini, if I put this, well, it's not on my system right now, but here's the ES Mini. We got this signal last week on Thursday, I believe it was, September 14th or 15th. Here's that Rhodes Momentum Indicator signal out here. You can see Stevie's red line. Price right now flirting with the bottom of its TAS profile. But it looks like where price wants to go in the ES Mini, next level is about 28.97, 28.93, right in that range. And that could set up a Gartley buy pattern, folks. A nice, big, juicy Gartley buy, medium rare. So let's just wait for the short-term signals to give us the message. You ready?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has just launched a Tiger Dollar sale for 1 weekend only. Through Tuesday, September 18th, you can get up to a 50% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN newsletter or service. TFNN has a new website launching in the coming weeks, and to celebrate, we're having a Tiger Dollar sale. For all the details and to get up to a 50% bonus on your Tiger Dollar purchase today, visit the front page of TFNN.com before this sale ends Tuesday.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, so Alan T. writes in, he says, just a comment, Steve, the gold players have been burnt so many times now. They just can't seem to get it going in a big way. Seems the same with gold and euros also. And, you know, Alan T., a good eye. You're absolutely correct with regard to traders of gold in euros. You know, each of us have probably heard the term every now and then. In fact, you might even think some of the information that I provide to you is worthless. You know, worthless, the word worthless out there. But the reality is it's really two words. It's worth less. And that's really the whole key of being able to take a look at any instrument to see how it is priced in other currencies. Because if you are a trader of gold in euros, what you see on your screen is gold is worth less. And if it is worth less, you are a seller. And today, there are sellers. They're coming out of the woodwork out here with gold priced in euros. Why? Because price right now is trading below the low of the hammer candle. That low was 1027.40. Gold priced in euros is at 1024.30. So we know where the natural sellers are. Maybe there's buyers of gold in dollars, U.S. dollars. But on the other side, right, the ability to be able to take a look at that image and see the young lady and the older woman out there is what you need to do. You have to see both sides of the trade out here. And that means you cannot ignore how gold is trading in other currencies, especially when it comes to the euro, the yen, and the pound. Now, we do have a battle that's going on out here because gold priced in yen is stable to moving slightly higher. In the case of gold in dollars, it's just moving sideways. But gold in pound sterling broke through the bottom of its hammer candle on Friday, and it is continuing lower today. Hey, if you really want to buy gold, don't be buying it in dollars. Go ahead and convert your dollars to pound sterling. Yeah, that's what you should do, because right now you can buy an ounce for $912.40. Of course, you wouldn't do that because you're saying, why would I do that, Steve-O? My local currency is dollars. That is exactly my point. If your currency, your local currency, was in pounds, you'd probably be saying, you know, that Steve-O guy told me when you close below the low of a hammer candle, if you're long, you're wrong. And that's what we're seeing. And so, yes, you're exactly right, Alan, because until gold gets moving in one direction in all currencies out here, it's just kind of a back and forth move out here. Now, Mike wrote in and he said, so just so we try to kind of keep things not in order here, but kind of fluent, so to speak. Mike writes in and said, what do you think? What do you see now, Steve? Do you think the GDX can break above 1842 on this run and go to 19? Now, Mike, now that you and I just took a look at how gold is trading in these other currencies, you answer that question. I mean, we know about the directional correlation of gold in dollars, and the GDX. But is gold just simply going to simply take off to the moon and beyond? Heck, it can't even get 10 feet off of the ground out here. But if we do go take a look at the GDX, just to better answer your question, make sure that we're totally thorough here. We put this up on the screen. Here's what we're going to see. What gold needs to be able to, or the GDX, I should say, needs to do is at least close above the top of its box out there, and that's 1837. So I know you said break above 1842, and we certainly do have a resistance level established by the low from August 31st, and that is 1850. So that might be a level to be watching. And certainly the mining equities can have a mind of their own out here. But the reality is, as we speak today, it's just simply run into resistance out here. And can it move higher? Absolutely. But in order for it to move higher, on the trading desks of traders around the world, on the screens of traders around the world, the price of gold cannot be worth less in their currencies. For if it is, there is not going to be any mo in the momentum trade to the upside. So that takes care of a couple of questions out there, and thanks for writing in. Michael P., he writes in and he says, is SQ a short? I don't know. SQ is square out there. So let's go take a look at fitting a square peg into a round hole. Now, I don't even know what that means out there, but it just kind of just flew off the top of my head. But Michael wants me to answer the question. Hey, I don't care. What's the square peg stuff? I just want to know if it's a short. Well, with regard to SQ out here, if we take a look at the daily time frame chart, here's what we know, Michael. It's got a Rhodes momentum indicator topping pattern out here. This, in fact, took place, let me get my cursor out here, that actually confirmed on September 13th, when that little dark cloud cover formed. The real confirmation came once price closed underneath Stevie's red line. Was actually green with envy on that day, September 14th. But wait, we have more. That really wasn't the sell signal, because what price did on that day was it stopped right at the top of its TAS daily profile. And now I'm hearing that my audio has been lost. And that means I'm moving my lips, words are coming out, and nobody can hear me, which is really not the greatest of things out there, because then I got to try to remember where is it that I left off when the audio was lost. I'm going to keep talking, because maybe inside the
I've been driving all night, my hands wet on the wheel. There's a voice in my head that drives my heel.
Hello?
It's my baby calling, says I need you here. And it's 4:30 and I'm shifting gear. When she's lonely and the longing gets too much, she says the cable coming in from above. Don't need to pump that on. We've got a thing that's called red eye love. We've got a wave in the air. Red eye love. The radio's playing some forgotten song. Brand new leaf coming on strong. The road has got me hypnotized.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, technical difficulty out there. So let's start where we think we left off, which was answering the question from Michael P. Is Square a short? So here's what we take a look at, Michael. We've got the daily time frame chart. We've got a Rhodes Momentum Indicator signal. That signal confirmed when we had that dark cloud cover on September 13th. We had another confirmation on Friday when price closed below Stevie's green line out there. But what we didn't get was a break, another break of support. Support was the old resistance level, the top of the TAS profile. Now what we have today is we certainly have a break above that. A break down below that level. So what this says to you and I is that the price target for Square, so if you're asking me a question, is it a short, you've got to make that assessment from the reward risk, because the reward is probably 84.45. That's the bottom of the daily profile. If it's not 84.45, it's 83.59. That is the weekly Stevie red line, and of course it's green with envy out here. So 83.89 to the downside. That is support. To 84.45, you're trading at 87.45 as we speak right now. So directionally speaking, I anticipate that it will head lower. Whether it's a short or not, that's a call that you've got to make out there. Earl writes in and he says, "Hi, Steve. I still own 100 to 500 shares of FBC. So let's go take a look at FBC. Don't know what that is. We're going to find out here momentarily. That is Flagstar Bancorp. Okay. So you still own 100 shares of that. I sold 400 when it's over 40. It's at 31.07 right now. And the question is, on the 100 shares, it just hit the 52-week low. Would you sell any rally or add to the position at this low? So in order for me to add at any type of position, what we want to see out here, Earl, is some type of bottoming signal. Just like Square here, SQ, had a topping signal, we want to see if ticker symbol FBC can generate some type of bottoming signal for us. Could be an A to B equals CD pattern. Of course, we would need to see some type of bullish reversal candle. We don't have that. If we're wondering where the ABCs are in this equity, we can come back and take a look at that. We'd like to see price get down to a level of support. That would be the TAS market profile on a daily basis, well below that, so that's not it. Maybe a Tom DeMark setup 9 count. Well, today's going to be number 7, so we're at least 2 sessions away from that taking place out here. So would this be an area to buy? No. Definitely not. Price is not moving lower with less relative energy out here at 3107. Let me just make sure I have my setting here. I want to make yeah, I've got the setting all set, so that would show up on this chart if we're out here. So I don't see it on FBC. We're below daily, weekly, monthly profile levels out there. If I take a look at the weekly time out here for FBC, I know this doesn't bode well for the 100 shares, but you had, whoops, that's not going to work really well. I don't know what the Sam heck happened there, but this chart's a little bit messed up. But it's a little bit like Steve-O, sometimes a little bit messed up, but yeah, messed up is not so bad. Here, if we take a look at this and we look for the A to B equals CD pattern, so we can look at price projections, our A point's going to be out here the week of January 22nd. The B point was down April 16, 2018. There's your retracement in the June 4th. It's at the 1-to-1 level, very close to it, 30.75. You're trading at 31.07. The low actually so far today has been 30.82. Not too bad, 30.82 versus 30.75. Look, I'm a big believer in waiting for the cavalry to arrive. You know, the one thing that I did as I began my technical analysis background, the most fundamental thing with regard to what buyers and sellers are doing out there was believing blindly when I learned the A to B equals CD pattern. It just completed it. Buy away or sell away. And when that didn't work out so well, I had to say, I need a wham moment. Wham, 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 wham. What am I missing? And what I found out was that you really needed to go ahead and join a couple of patterns together. You really needed to know how the market talk walked and squawked. And how the market talks walked and squawked is it generates some type of bullish or bearish reversal candle. And it does that right around where a pattern is going to complete out here. Now, this is the weekly time frame chart. It says you couldn't get a bullish reversal candle until the end of the week. But we could go take a look at the daily, which we just did, and there was no bullish reversal candle there. So price might be targeting 30.75. It could be 28.78. There's no question. You were asking FBC, and I'm guessing this is a little bit of a long-term holding. Should you buy it? H.M. Gartley would say, are you kidding me? Of course you should when you get that signal. Why? Because if you take a look at the run here for Flagstar Bancorp from the lows of 2016, one huge move, huge groove. Great band out there, by the way. And what H.M. would tell you, and when he wrote that book, he was charging basically the cost of a Ford F-150. Would you pay, right now today, would you send me a Ford F-150 for this advice? Probably not. But I would take it, just so you know. But what H.M. said was when you've missed a big move here, and this would be a gargantuan because this was going from the lows of about $17.25 up to that $40 level, which is where you sold. Nice job, by the way. Now all it's doing is it's creating that Gartley buy, which requires you to have an A to B equals CD pattern, in this case here to the downside. And so we're close. But it's no cigar. I would say just wait for the cavalry to arrive. Wait for that bullish reversal signal. Of course, it would be helpful to know where Stevie's red line is. Right now, as we're speaking, that's 32.09. And it would be super helpful to have that as well as the TAS market profiles. Of course, the easiest way to do that, just keep writing in a show, join the newsletter, or something along those lines, or just simply go out and get those tools yourself. So thanks for writing in. Hopefully, Earl, that assists you. But is now the time? The answer is not as far as Stevie sees it. So it looks like we've been through all the questions with a couple of minutes to go at least. And so what do we do next? I know what we can do. We can go back to another question that James had out here, and that's from earlier. Because James is taking a look at, because he needs to go ahead and put some money in the foreign equities out there, right? Most people who have a balanced portfolio, whether it's managed by themselves or it's managed by somebody else, by balance, what they mean is you don't have all your eggs in one basket out there. And what does that mean? That means you have a certain portion, depending on your age, invested in foreign equities and based it in U.S. equities, based in fixed income, a little bit maybe in commodities, other things like preferred stocks or real estate investment trust, things along those lines out there. And so for those of you that want to invest, and especially in today's day and age, where all you hear on the boob tube out there is everybody saying, get into those emerging markets. They've just been trashed and they want to buy low, right? The old idea of selling high and buying low. You realize that is the absolute worst possible advice that any human being or computer or anybody could ever give you. Think about that. Think about how often that is actually regurgitated out there. Buy low, and sell high. How do you know when you get a low? And how do you know when you get a high? If something is moving higher and it's got momentum to the upside and it hasn't traded below Stevie's red line, why in the Sam heck would you be selling that? It makes no sense at all. Just like if you're going to go ahead and buy some foreign equities out there, you know, one of the ETFs, such as the EEM that we have up on the screen out here, and just like gold, and just like anything, and especially with the emerging markets, you want to know if that is breaking out. Has it bottomed in all major currencies? We take a look at the EEM in euros. Not a chance, Jack. And I don't mean this for Jack. You know, and I was just kind of using that name out here. And in pound sterling, not a chance, Joan. Yeah, don't do it, as Rodney Dangerfield would say. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Let's use the last 2 minutes just kind of to wrap this thing up, really where we began, which was a question from James C., which was asking me to review what I shared with you last week. I'm going to share this again at 3 o'clock, 3:15, I should say, when I do the segment with Tom. So if you didn't hear it, then tune into that segment or go watch the archive of this show on TigerTV. It should be posted in an hour or so out there. And that is this, that the Dow has given us 2 signals that it's got a paradigm shift in price. What I mean by that is we won't see these lows from April and February again inside the Dow for many, and I mean many years to come. Now, that doesn't come into effect until we get the final confirmation. The third time is the charm out there, and that's the Dow taking out its all-time highs from January out there. If we take a look at this set of charts out here, you've got the Dow in the upper left-hand corner, and then you've got all the other major indices. You've got the UK next to it. You've got Australia next to that on the right. Then in the column, the row 2, you've got Canada. You've got then China. You have China. You've got India. Then you've got in the bottom, you've got Germany, Japan, and you've got those emerging markets. And if we just simple trend lines out here, that's the easy peasy stuff out here. You'll see that the only thing that is breaking out is the Dow and is India out here. Everything else is well underneath the trend line. Money has got to flow somewhere. It's flowing here. It is knocking on the door. These markets, the Dow, the S&P, the NASDAQ, the Russell, they're headed higher for a long time to come. Same thing with the U.S. dollar index. That thing is just testing some support. Don't get too shook up about the fact that it's moving, lower by 400 ticks today or whatever it is. It's just testing support. That is where money is flowing. And for those of you that love that A to B equals CD pattern, just take a look at these little puppies out here. The S&P 3278 is the next target. We're talking longer term. That's an A to B equals CD. That's been confirmed to higher price. Thanks so much for being here. Stay tuned, folks. Your favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5. I'll be back with Tom at 3:15. Have a great Monday. Oh, I won't be here tomorrow for Horrific Tuesday. Maybe I could do the 8 to 8:30 segment. Take care, folks. We'll see you on Wednesday for sure.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletter.